UK banks are lining up to relocate outside the UK. As the sector lines up to report earnings, this has become the big news. The British Bankers Association has said that the threat of Brexit has set in motion a process that will see large banks move away. John Rowland joins us now from Cicero. John, it's an interesting situation because here at the moment we've got one eye on earnings for the banking sector, and then all of a sudden this has now been overshadowed by the word from the British Bankers Association over the weekend. Do you see this as just a threat, a hollow threat, or is there some element to this?
Well, firstly, I think you'd expect the head of the BBA to make a very robust defence of the industry and its position going into the Article 50 renegotiation. I think he makes the point in his piece in The Guardian, which is you don't bid against yourself. So if the banking industry wants passporting, it should ask for passporting. Now, in terms of the sector looking at its options, I think that's fairly a logical step. I suspect that the huge exodus of banks probably won't happen, but the point that they are reassessing their options is certainly the case.
One of the interesting things I think that has not escaped many people's notice that we've got the euro clearing here in London. The euro has never involved London. The UK has never been part of the Eurozone, but we've managed to retain that. I say we, the city has managed to retain that. In the longer run, do you see the city perhaps possibly maintaining or continuing to run a lot of its business here in London rather than go abroad to Frankfurt or Paris?
I think there are lots of things at play here. Firstly, is it Frankfurt or Paris that this business potentially goes to? In some cases, the answer is yes. Some of that business could actually go to New York or Singapore, where the remuneration rules might be less stringent, where the regulatory rules might be actually a little bit more welcoming. The second point of that is what's London's role in this globalised world? And I think over many hundreds or even 1,000 years, London has been a centre of global commerce. I don't see that changing. Some lines of business may well go elsewhere, but I think for the large part, a lot of international business will remain in the UK, so long as London and the other financial centres of the UK can remain competitive by international standards. And if we start slipping behind the Singapores and the New Yorks, then I think it's not just about Brexit, it's about London's position in the world.
Part of that, as you say, is the regulation. The interesting point here is when the status quo we saw a couple of years ago, I think commentary was about this, about the fact that Europe was wanting to tighten regulation and banks were fighting shy of wanting to have exposure to that. Obviously, London was then seen as a good place to be. The EU's intentions on regulation, to my knowledge, haven't changed. And it's going to be more difficult for banks to operate within Europe.
Well, for the large part, the EU's regulations are London's regulations for things like bank capital and financial instruments. So we are in the same regime, and this is where the challenge is, that if we go outside, we're no longer part of that regime, and therefore the Europeans might say, well, you're not equivalent to us, or you're not the same as us, and therefore we're going to shut you out of our markets. So there's a follow-on point to that, which is, does London on the outside of the EU look like a more competitive regulatory environment? And that's not always the case. I mean, the British government has layered on rules on top of what we have in Europe, things like the bank ring fence. These are all things which are UK initiatives, which are separate to those that are going on in the EU, and indeed the bank tax surcharge as well. So,
interesting enough, in the last week or so, we've seen traffic flowing in the other direction. ING, the Dutch bank, has said that it wants to certainly maintain a big presence here in London. And I think, in fact, it's bringing some trading positions into London as we speak, which is a vote for the city, isn't it, rather than anything else?
It's a small vote. I think the ING numbers were quite small, but what I think it does illustrate is that financial institutions all take a different view on things, and there are some firms which are going to say London still works for us, we want to be here, this is the future. Other firms will say, well, actually the business case for London is not the same as it was, so we will think about what the balance is of London versus other European or international centres. So there is going to be this backwards and forwards. I think net the risks are probably on the downside for the UK at the moment, simply because of uncertainty. Now, I don't know what that looks like in 5 years, but right now I think, the insurance being cautious, people will think about what can we do to structure our businesses to make them look, or to make them more resilient to the political risks of Brexit.
We've been talking about international banks here. We do have banks here in the UK that do nothing other than UK business, the Aldermores, the Virgin Moneys, the Metro banks and so forth. What's their business going to look like?
These guys are focused on the UK, so what they're interested in is the long-term health of the UK economy. Are UK SMEs in the market for funding? Are people borrowing money to buy houses? Are they saving? These are the things that these banks are interested in. Much like a smaller version of Lloyds Banking Group, which has always been considered a big UK domestic play, these guys are the same. So Brexit for them is important insofar as it affects the UK economy and the regulatory framework in which they operate. But for them, it's not necessarily as important as it might be for some of the global institutional players.
Just one final question. What's London going to look like in the banking sector in 5 years' time?
London will look different. There's no question of that. I mean, we could still be negotiating the finer points of a lot of our exit even in 5 years' time. 2 years for the initial negotiation, easily 2, 3, 4, 5 years after that to settle all the details down. With potential for transitional arrangements as well. So I wouldn't be as bold to say exactly what it looks like. I suspect our banking system will look simpler. There will be more focus on domestic markets. I think it will also perhaps be more ex-EU, so more globally looking and looking at markets outside of the EU. We've seen China renminbi trading and fund management as well. So I think that the city will be here. It will be profitable. It will be fairly resilient, but it will look different, I think.
OK, John, all right, we've got to leave it there, but thanks for joining us. We look at the banking sector as we edge ever closer to what is expected to be a March sign and sealed Article 50. That's John Rowland, Executive Director at Cicero.